and welcome back to my YouTube channel. Hopefully, you are doing great and fantastic. Well, we have studied some many topics which are really crucial. If you didn't watch my first video and second video, which are relevant to this video as well, you won't understand this part of the video. Well, those topics are about accounting, what is accounting, the concept I have clearly explained about accounting, the basic terms of accountings. We learned a lot about that. I discuss the basic terms. So it's very important. If you didn't watch it, go that and watch first video, the part one and part two. You will get to know a lot of things about the financial statement. We also discuss in those videos about the financial statements, the managerial uses of the financial statement, needs of financial statements, the importance of the financial statements, and many more. We have discussed about the financial statement, what is financial statements, the analysis, why we use it, what are the advantage and disadvantage, so many things like we have discussed about it. um, I think you better to go and watch the videos till end. You will get to know about the financial statement, about accounting, everything. We also discuss about balance sheet, about the um, you know, profit and loss accounts and cash flow statement as well. We have discussed about those as well. And we also discuss many terms about the balance sheet as well. And profit and loss account, what the terms are included over there. So you will clear your mindset and you will have a clear picture about the financial statements. Many things you will learn. So please watch those videos and then come back to this video because you won't understand better and comprehensively about this topic as well. So let's get started. Techniques of financial statement analysis. There are few techniques like comparative analysis, common size analysis, trend analysis, funds flow analysis, cash flow analysis, ratio analysis, cash value, and profit analysis. These are the techniques that through these techniques we will be able to comprehensively analyze the financial statement. Well, we are going to, I will walk through all these, techniques. I will discuss each and every single one of them, and you will learn about it and understand. If you have any doubts and anything or any inquiry, please make a comment, write on a comment. Anything doubts, if there's any shortage or something wrong here, maybe if I'm not able to clearly convey, you know, um, the explanation, or maybe there's something could be ups and downs in this video, please write in the comment below. I will get back to you and I will bring, many clear idea, many good things about, each and every topic. I will clear your doubts definitely. So let's get started. Comparative analysis, as the name suggests, that it is comparing the first year and the last year. I mean, the current year and the last year and the current year. The data we are going to bring in, we compare both the year, the data, the performance of the business, and then the last year performance and the current year performance. Well, just understand whether our business has performed better or adverse. I mean, whether our business has grown or declined from the first year to the current year. All the data, we will understand and compare. So by comparison of the current year with the past year, whether the performance has been like improved or deteriorated, with compared to the last year, we analyze the growing and declining status of our business. The next one is common size analysis. In common size analysis, we are going to condense the data by calculating the percentage. Each and every item of the profit and loss account or make balance sheet, we are going to analyze and we will understand it by the percentage. We express as a percentage of the base item as well. You know, the base item of the profit and loss account could be the sales, and for the balance sheet that could be, you know, total assets as well. So this is what we are going to do. That base account of the profit and loss account is a sale, then the calculating of the other item by the percentage of sales. Simple example, like if in case of the trading profit and loss account, the gross profit could be 2 lakh and sales could be 10 lakh. So instead of saying the gross profit is 2 lakh and sales is 10 lakh, we can express this in percentage. Like in percentage, what we are gonna do that the 2 lakh is 2 lakh upon 10 lakh and multiply with 100, so that will bring the percentage for sure. Like 10 lakh is our sales and 2 lakh is definitely the gross profit. When we do that, when we do that and multiply with 100, the what will come up, that the result will be says that our gross profit is 20% of the sales. Like sales is 10 lakh, you know, instead of saying that the 10 lakh is 2 lakh is gross profit and 10 lakh is sales, we say that like the gross profit is a 20% of the sales. Like in this way we calculate all other items as a percentage of the sales. So you know that we are converting, you know, instead of taking the actual value, we have to convert the actual values into percentage, and that type of analysis is called the common size analysis statements. And then what we gonna do that, why we are doing this, yeah, this is like surely we can say that indeed the data will be condensed, analyzed easily, and can be able to understand. So by that we analyze and we end the statement of the profit and loss account in the balance sheet. And so, and you know, interestingly, that you know that this is all by the percentage. We will understand in percentage of that value as well. So we will understand the business is going to have, you know, a good status, good performance or not by the base of the percentage of that. So by this way, we are going to do the common size analysis. Well, let's know the let's talk about the trend analysis. What's the trend analysis? If we look our performance over the past few years, is it growing, declining, or fluctuating, or constant? So trend analysis, as the name suggests, that it suggests as the trending of our market. Maybe like when it come market is sometimes declining, sometimes it's trending, it goes up, you know, like that. It suggests us that whether our business performance is in upward direction or downward direction. Well, in trend analysis, you know, take the first year as a base year and calculate the percentage of all other values of, you know, as a percentage of the base year. So we are comparing all figures with the base year to find out whether our business direction is change, whether it is increasing or declining. Well, next it come up fan flow analysis. In fan flow analysis, we find out the changes in funds. The changes in funds, you know, funds means the working capital, whether working capital increase or decrease. Compared to the last year, you know, we compare to the last year with our account funds increasing or decreasing. Thus, that means that what are the changes, you know, take place in the asset and liabilities for a period of time, last year and current year balance sheet. Do you think the value of balance sheet, you know, both year will be same? Absolutely no. There are a lot of, you know, changes could take place. last year and current year, the balance sheet could be different. So business organization want to know what are the changes in the assets and liabilities by calculating changes in working capital. That is called fund flow analysis. So here what we are going to do that the fund so obviously the fund means working capital changes in working capital like fund flow analysis also called the statement of sources, application of the funds. What are the sources that surely this fund flow analysis could be talking about what are the sources funds comes from, um, which funds has been received and what are the application of the funds areas, the funds has been taken has been deployed to there and how that gonna how much it's gonna spend over there. So that's what like that fan flow analysis is gonna be take place. And in this case we understand the fan flow analysis is about all about the funds to analyze and understand the working capital, the application area that could take place. The next one is come up the cash flow analysis. The cash flow analysis is one of the techniques of financial statement analysis in which is we are when you find out what are the inflows of the cash and what are the outflow of the cash, sure, you know, during the period of time. So the cash flow will be through, operating activities, investing activities, financial activities. So in this way, we divide all the activities of the business, operating, investing, financing, and we are closely monitoring that and screening the inflow of the cash and outflow of the cash in all those operating, investing, and financing activities during the period of the time, which can be ascertained by applying the cash flow analysis. Well, operating activities, investing activities, financing activities. Through that, we understand the cash inflow and outflows. Ratio analysis, what is the ratio analysis? The next one, which is come up here. It is a technique of expressing the relationship between the two variables. It is widely used techniques of a financial statement analysis. A very important one, the manager will definitely use the ratio analysis. This is like ratio analysis is a technique that going to through each and everywhere in the world. In every nation, we use the ratio analysis. Well, ratio analysis is just only making techniques, mathematical techniques. It is, express the relationship between the variables. Only that's what the ratio analysis is gonna be. Cost value profit analysis is about, that this one, I think, this could be a techniques where we make and cost accounting, I think, yeah. We make relationship between what? Between the cost, value, profit. Cost, value, profit. Because cost, value, profit analysis, you know, just only we create the relationship, make the relationship between all of them by applying this method. A number of the major decision can be taken regarding the what level of the activities business will neither get profit nor loss. Well, what is like the level of the activities that a business will get desired profit? Like how much sales are required to earn our desired profit? Similarly, the product makes decision, products makes decision about that. So like about whether the business should continue or shut down, you know, about that as well. Make or buy decision as well. All these managerial decision can be, applied by using the cost value profit or CVP analysis, in which one of the techniques of the financial statement analysis. So those are the few techniques financial statement analysis which are widely used and everyone understand the financial statement analysis if they know these few techniques. Well, these are the techniques. I hope you will understand something from my side as I explain everything clearly. Hopefully, you get everything very clear and we will understand, in details more and more about it. How to analyze and how to know the financial statement analysis more and more in depth. Hopefully, you get to know what I said and what was the comparative analysis, currency analysis, trend analysis, and fund flow analysis, and cash flow analysis, and the ratio analysis, and cost of profit analysis. So until next time, have a nice time, and we'll get back to you soon. Bye bye. Enjoy your time. Enjoy your stays.